Good morning and welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. Eli, we've got quite a packed show today. From crypto flash crashes to major market movements across stocks and commodities. Let's dive right in. First up, Bitcoin experienced what some are calling the flash crash, dropping from $126,000 to just $12,000 in a matter of hours. What's driving this extreme volatility?
That's absolutely staggering, Maya. This kind of price action is indicative of massive liquidation events, likely triggered by leveraged positions being wiped out. The fact that we're seeing such dramatic moves suggests the market is extremely sensitive to news or economic data. It's a classic case of panic selling accelerating the downside, and it's crucial for investors to understand that these aren't just price fluctuations. They're structural shifts in market sentiment.
Let's take a closer look at the technical picture. We're analyzing Bitcoin/Tether on the daily chart using the Fibonacci retracement strategy. Eli, can you walk us through what the indicators are telling us right now?
Absolutely, Maya. From a technical standpoint, Bitcoin is currently testing critical support at the 38.2% Fibonacci level, around $110,742. The price has been consolidating between the 23.6% and 38.2% levels, which suggests some buying interest at these lower levels. However, the relative strength index is showing oversold conditions at 38.58, and the moving average convergence-divergence has crossed below its signal line, indicating strong bearish momentum. The on-balance volume is also declining, confirming distribution pressure. If Bitcoin breaks below that 38.2% support, we could see a move toward the 50% retracement level at $113,690.
Staying with cryptocurrencies, Ethereum is also showing signs of stress. The technicals suggest it's approaching a crucial support zone. What should traders be watching for here?
Ethereum is indeed in a precarious position. It's been trading between the 23.6% and 38.2% Fibonacci retracement levels, currently holding above the 23.6% support at $3,674.42. The relative strength index at 33.92 is nearing oversold territory. And while the moving average convergence-divergence shows bearish momentum, there are early signs of stabilization. A hold above that key support level could present a potential bounce opportunity, but a break below would signal deeper retracement risk.
Shifting gears to traditional markets, let's talk about Nvidia. The stock saw a sharp 13% decline over just 2 trading sessions, accompanied by extremely high volume. What does this mean for tech investors?
This is a textbook example of trend exhaustion in the tech sector. The sharp reversal from $195.30 to $182.39, coupled with volume of 18.4 million shares, indicates strong institutional selling pressure. The breakdown below previous support levels suggests that the uptrend has been broken. For investors, this is a warning sign that the easy gains may be over, and we could see continued volatility as the market reassesses Nvidia's valuation.
Before we wrap up, let's touch on the broader market context. The NBA's return to China after 6 years is being described as a $5 billion opportunity. How might this development impact related stocks and the broader market sentiment?
This is a significant geopolitical and economic development, Maya. The NBA's re-entry into China represents not just a sports story, but a major reopening of one of the world's largest consumer markets. Stocks with exposure to Chinese consumer spending, particularly in entertainment and media sectors, could see renewed interest. However, investors should remain cautious about potential political risks that could impact these investments.
And finally, we're seeing major banks prepare to report earnings with high expectations. What should investors be watching for in these reports?
The banking sector's performance will be a key indicator of broader economic health. Investors should focus on credit quality metrics, net interest margins, and provisions for loan losses. With regulatory support under a favorable administration, banks may be positioned to lend more aggressively and return capital to shareholders. However, any signs of credit deterioration could send shockwaves through the financial sector.
That's all for today's market update. Key takeaways: extreme volatility in crypto markets with Bitcoin and Ethereum testing critical support levels. Nvidia showing signs of trend exhaustion in the tech sector. And major developments in global markets with the NBA's return to China. Tomorrow, watch for those crucial Fibonacci support levels in crypto, continued tech sector volatility, and the impact of bank earnings on financial markets. I'm Maya Keynes with Eli Sterling. Thanks for watching.